I think we all try to be very careful with our communications, and we try to give
Did he err, in your view?
What we think of as where we're going on policy, knowing that the data is going to inform our views and our meetings.
So we should assume that.
So I think you have to look at the whole panoply of communication. So the statement is one, the minutes are a very good one, the press conferences are another one. So
but if it's
I think the reason this probably took more
and it's his Fed
is because all of those things that you talk about are orchestrated a little more closely. This was something that was a question and a response to a question in an interview, which made people think, okay, maybe that's really telling us what he thinks on the inside. Maybe that's why people are panicking about it.
So I would just recommend looking at all the communications as a set of communications.
But there's a
We're trying to give our
specific question.
That's why my first question was whether it's his Fed, because I don't listen to anyone else, then I just listen to him.
Well, I think you should listen to the whole group because we're trying. It
hasn't worked in the past. It was Ben Bernanke's Fed. It was Alan Greenspan's Fed. It was Janet Yellen's Fed.
I'm not sure that that's the case.
I wonder, though, if what we're after here is a direct response to the statement by the chairman, which is, do you think we are a long way from neutral?
I think you like to hike when you go to Jackson Hole. Right, and when you're hiking, you go out and you have a destination.
So you're not talking about hiking rates, you're
right? No. When you go out,
yeah, that's what I thought too. I said, oh my God,
you have a destination in mind, and then the conditions on the path are going to tell you whether you get there or not. You might slow down a little bit if the conditions are like there's debris on the trail, or you might go on. Moreover, if you see a nice lake, you might decide to abandon that destination and stay at the lake. Well, so we're going to be using what the economy is telling us and the data that comes in to inform our outlook, and that's going to determine. When you think about where we're going in terms of rates, right, we all put in a long-run growth rate for the economy in those SEPs. And
a long-run neutral rate.
And a long-run neutral rate in the economy.
Right.
But, we're going to use the data to tell us where we are relative to our two goals. So we're always focused on the two goals.
Sorry, Loretta, I got to come back at this question, though, which you maybe just don't want to answer, which is fine. But we're at 2.25 now.
Right.
Where is neutral in your opinion, and do we need to get there?
So the long run, if you look at the SEPs, my long run growth Fed funds rate is 3%.
Okay.
Okay. But the neutral rate is going to vary over time.
Okay.
It's not it's not a one-time number. So if there's headwinds in the economy, as there was in the financial crisis, we went slower, because the short-run neutral rate was lower. If there's, tailwinds, then the short-run neutral rate is going to be above. And so we have to use what's going on in the economy to inform us about where policy should be.
Okay, data dependent, no one knows what's going to happen. But when he said it, we already knew about the trade issues. And should that have been more of a part of his...
What do you mean, the trade?
The trade tariffs and things? The headwinds of where we are in trade is already something I would have put into my data set in terms of a calculus to maybe not be so sure that we were so far behind it.
So that's fine, and we do that. So we assess, we talk to our firms. So majority of firms in my district, and we have a heavier manufacturing district than some other places in the country, they haven't reacted, they said, to the trade, they're concerned about it, they talk about it, but have they changed their investment plans? Not yet.
Steve is very concerned.
Some manufacturing
You've been concerned
firms
for a while.
say that it's very disruptive because they have to think about their supply chains, and changing supply chains is very fun. So I think that is in the calculus of risk. And if you look at the minutes of the FOMC meeting, you'll see that trade and tariff policy is one of the risks to the forecast.
Can I just follow up on this? You said earlier, Loretta, that everyone walks into that meeting with their own ideas of what they're seeing in their districts. What we're trying to figure out in the markets right now is how quickly the economy is changing, how quickly the economic growth is being impacted. From what you're hearing from everyone, what is your opinion right now that you're taking in from everyone you hear? Is this slowdown for real? Is it something we need to be concerned about?
I think the economy is slowing from the very strong growth that we had earlier, but it's still an above-trend growth rate. So we see this slowing down. Now, we're always assessing continuously the risks to the forecast. It could be that there's upside and downside risks. There's balanced risks here, which we haven't had in a long time, So the upside risk, it could be that, business sentiment has been very high. That's a tailwind. We also have fiscal policy. That's been a tailwind. On the downside, we have the global economy is slowing, right? And that potentially affects the U.S. economy through appreciation of the dollar and other avenues. We also have the trade and tariff uncertainty. Even if you think about the direct effects of the tariffs, right, it's also the uncertainty that the tariff and the trade policy can have on firms. And so there is, some downside risk and some upside risk.